The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at what is happening in the market trade as we've rolled out of the month of February and getting into the month of March. Pleased to have with us our good friend Chad Hart, economist at Iowa State University. Chad, always great to catch up with you, sir. I hope things are going well there in Ames.
Doing really well. How are you, Jesse?
I am good. I'm good. And thank you very much as well. And, you know, I know that we've seen some snow events in your neck of the woods and ice and whatnot here the last couple of weeks, but you know, the one thing on the horizon, Chad, I mean, calendar flip it over here to March. We are getting ready and getting closer, theoretically, to spring planting season. And I think that's got to have some farmers excited.
Oh, it does. I mean, we went from snow to ice to, last night, a good thunderstorm rolled through here. And so you can see the weather patterns changing. We're getting a little more moisture here in the state. And yeah, that has farmers sort of chomping at the bit, getting ready for planting.
Definitely. Well, as they chomp at the bit and get ready for planting, they're still gotta pay attention to the markets and their marketing plan, et cetera. And a lot's been going on in this market trade here in the last couple of weeks, Chad. And you know, as we look at things, we've started to see a bit of a pullback in some of these grain and oilseed markets here. Especially, I think the winter wheat markets have been hit pretty hard the last couple of sessions. Corn as well, starting to maybe pull back to the bottom end of its range, maybe set a new range possibly. To start, what's your thoughts here as we look broadly at this grain and oilseed sector? How do you see things as we get into the month of March?
Well, that's the deal. I think the market's looking at two things right now. One would be the global supplies we've got on the grain and oilseed sides, which for the most part are pretty, let's call them strong supplies. We see a lot of production growth, especially outside the U.S., that's been hampering us in terms of export potential. And that's the other big key here, is that while we've got these large supplies worldwide, we are seeing export demand pull back a bit. Some of that is because, our trading partners are going to those other countries with their amenable supplies. But we're also worried, and I'd say USDA sort of highlighted this in their Ag Outlook Forum, is that we are worried that, let's call it the global consumer, is starting to slow down, that they're not buying quite as briskly as they have been for the past couple of years. And that may be catching these grain and oilseed markets sort of at the wrong time, because it looks like we're going to ramp up production right as demand is starting to slide back down again.
Well, you mentioned that Ag Outlook Forum. I'm glad you did. As you know, we think about that demand maybe sliding back. Farm income sounds like they're projecting those to be lower. Yet we see a projection quart of beans, if it comes to fruition, would be record yields for corn and beans in that Ag Outlook Forum. Now, I think everyone maybe expects those numbers to pull back a touch, but what's your thoughts on some of those numbers we saw when it came to the average yield projection, acreage, et cetera, from the Ag Outlook Forum?
All right, let me start with the easy one. That's the yield side. Whenever USDA lays out their numbers here at the Ag Outlook Forum, it's always just based upon their weather-adjusted trend line yield that's looking out there. So in this case, they haven't done a lot of adjustment for, say, the big drought conditions that still exist across the western U.S. It's mainly a 30-year trend, and that's where you're getting the stronger number out there right now. And they won't likely adjust that down until we get deep into planting and see how well we're moving along in terms of planting progress. But when it comes to the acreage side, what USDA does here is they make an initial estimate at this, and they did it last fall. So we had some early numbers in November with their long-term projections, and then they refine those here for the February Ag Outlook Forum. And what we saw them do was they say, corn area is likely going to go up. Most of that is a recovery from prevented planting from last year. They're saying soybeans is basically going to hold tight at 87.5 million acres. And then they showed some growth on the wheat side as we're looking out there. And a lot of these changes are a rebalancing, if you will, within the crop sector. They're seeing less land going into cotton, and they see basically corn and wheat sort of picking up the balance of that land.
Well, and I think about some of the acreage here as well, and the acreage battle, quote unquote. I've heard some differing opinions, devil's advocates saying, well, farmers, if they fall applied fertilizer, their decision's made, or if they, looking at fertilizer prices, may not necessarily, even though we've come down, may not necessarily make a big adjustment to acreage decisions. What do you think about the fertilizer outlook and just how many acres we could see maybe change in the next 6 weeks, Chad?
Oh, you can still see, a few million acres move around over the next 6 weeks here. Because while it's true that, yeah, when that fertilizer does hit the ground, it does tend to indicate, okay, we know where farmers intend to put that land, what crops they're aiming towards. But let's face it, Mother Nature drives that final decision. And so we tend to talk about a 5 to 10% swing is still possible here within this next couple of months due to what does weather conditions allow us to plant across the nation. Take you back in time. You think back to this time last year, and again, USDA was looking for an increase in corn area, and what we found was instead, no, we shrunk back, 4 to 5 million acres. Well, what was doing that was, the weather changing and forcing farmers to adjust their planting intentions based upon what weather conditions would allow.
Well, and I look ahead here, Chad, and I think about, obviously you hit the nail on the head. Weather's going to be a big story here moving forward the next couple of weeks. That's going to dictate a lot of those decisions. Corn, still really good prices on the board here. New crop corn, I mean, a little below that $6 mark, that 590, 580 mark. Hopefully, some producers have been able to protect some risk there. But either way, still, if they haven't done a whole lot of forward marketing of new crop, it's still a really good price on the board right now, Chad.
Oh, yeah. I mean, I'd say that's the advantage that we're sitting with in a lot of our crops. When I look at corn and beans, pricing both old crop and new still remains very strong as we look out there. Yes, we've had some demand challenges, but still we're working with smaller crops coming out of 2022. That's helping hold prices at very good levels for producers. And that's part of what, again, USDA sort of laid out in their net farm income. They show things slowing down in terms of, income growth, and that we're going to pull back here a bit, but we're still talking about very good income levels for farmers through 2023.
How much the CFTC data? We spent basically a month without that due to the ransomware attack. Last Friday, we started to get some of that information back out, although it's about a month behind. And it's going to be one of those things where they say they're going to roll this out as they can to try and get us caught up. What do you make of that situation and how that impacts just the broader trade action in the markets, not knowing for sure if funds are net short, net long in these markets, Chad?
Well, that's the deal. It's just another piece of information that's missing right now that we've gotten used to having, and so that we factor that into what we expect prices to do. Because let's face it, a fair amount of trade does come from speculative interest, and so knowing roughly where that balance sits helps us figure out, okay, which way might the market be leaning, especially if the funds are approaching one of their critical times. For example, as we get to the end of every month, we know that a lot of funds rebalance their commodity portfolios. Well, it's nice to know, are they short, are they long, which way are they going to need to rebalance? That helps provide some additional price signals within the market. So it is a big deal. It'll be good to get that information back online and in a timely manner. But it's like other things, when we've dealt with, for example, on the trade side, when the government would shut down, we lose the weekly export reports, and we sort of feel around for a while, missing that data until it comes back in again. And so we're in that same sort of process right now with the CFTC data.
Chad, as well, South America, with everything going on with the dryness in Argentina, some of the rains in Brazil delaying soybean harvest and safrinha corn planting a little bit. What are your thoughts? What's the latest you're hearing out of Brazil, Argentina, how that's factoring into the global picture, Chad?
Well, definitely with the Argentina, we've seen the cuts in production that USDA's laid out there. The private estimates are showing even larger cuts as we look out there. And so, that is helping tighten those global supplies a bit and again, support prices here in the near term. I think as we're looking longer term, though, I think the question becomes okay, we're looking at the National Weather Service and their forecast showing that La Nina is weakening. That tends to mean more moisture across our corn and soybean belts. That also tends to mean that Argentina next year will pick up additional moisture as well because they have that same pattern with us. So it's likely as we're looking longer term, we're looking at larger production coming out of down there. But right now, yeah, especially with the Argentine crop being smaller, that's being supportive. I think the challenge here is really how does Brazil continue to grow? We've seen tremendous expansion on the soybean side, and definitely with their safrinha crop corn, there's growth on the corn side as well, and they've really risen to become our major challenger when it comes to export potential here over the next 2 to 3 years.
We are having a conversation today with Chad Hart, economist at Iowa State University. Chad, I want to talk the broader economy here a little bit. This will help us segue, I think, into livestock trade nicely. Obviously, still recession worries out there in the broader market trade on Wall Street. We think about inflation. We've seen some of that data come out here in recent weeks, been a little bit hotter than anticipated. What's your take on just where things stand with the Federal Reserve, inflation, recession worries, et cetera, right now?
Well, I think the Fed is still trying to figure out, do they still have that potential for that soft landing that they're looking for? They're trying to keep the economy growing, even though everybody's worried about the possibility of recession. At the same time, too, trying to rein in inflation. And what they're finding is that's really tough right now. They put in this series of interest rate increases that has had an impact, but as you said, the latest data shows this inflationary problem we've got is stickier than they had hoped. And so I think we'll continue to see probably at least a couple more interest rate increases, probably of the quarter of a percent variety like they did this last time. But, I think they're trying to slow down and wait and see how does the economy respond to this. They know that some of these inflationary problems are supply chain driven. That's something the interest rate is not going to fix. The other thing they're watching very closely is consumer spending. And so what we've seen, especially over the past year and a half, is that consumer spending has been this sort of juggernaut that's continued to grow. We've basically stopped saving like we did during COVID and now have really drained that savings rate down to an incredibly low level again. And so we're waiting to see, does the interest rate increase get folks to spend a little less, save a bit more to help put the brakes on inflation?
Well, and I think on top of that as well, thinking about the farm, obviously, if farmers, those operating loans, et cetera, it interest rates are higher, it costs more money. Money costs more in this environment, and I wonder how that could impact some operations here this year, especially as the talk of planting the most expensive crop ever, supposedly here with just the cost of inputs and everything else. I think about that on the flip side for farmers and ranchers here in this inflationary environment right now.
Well, as you say, yeah, they're looking at the highest costs that they've ever seen through their careers, but they're also looking at some of the best revenues they've ever seen. And
Mm-hmm.
in essence, I would say ag, we got to enjoy the good side of inflation before we had to deal with the bad side of inflation. We got to see our expansion in revenues sort of up front, and now we're seeing that expansion in cost catch up to us now. But I think as farmers are looking forward here, it's better to produce usually more than less. The idea is if I'm going to have income coming in, that still runs back to production. And so I think that goes into, like I say, look back at USDA's numbers. They're showing this growth in area
Mm-hmm.
despite the increase in input cost. Why? Because the prices are still strong enough to cover those costs right now.
Well, Chad, let's talk livestock. Thinking about some of that consumer spending at the meat case, looking at this cattle industry, looking at beef at the meat case. We had another cattle on feed report Friday, 4% lower, February 1 compared to February 1 of 2022. Pretty much those numbers came in as expected. We continue to see this cattle herd shrink and shrink and shrink. I just wonder, what this is going to continue to look like as we continue to presumably shrink this herd before we start rebuilding it, Chad?
Yeah, it's going to take some time. And I think a lot of this, you got to remember, is linked back to the drought and the idea of it's you can't expand that cattle herd until you've got the grass, the pasture, the rangeland with which to let that herd expand. And I think that's the major challenge. It's not an economic challenge. I would say prices are strong within the livestock industry. These prices could spur on some expansion if the grass was there. But that's the problem. The grass isn't. And so,
Mhm.
as we're looking out here right now, yes, USDA signaled 2023, we will be lower. I've seen some estimates that suggest 2024 will be lower again as well, because we know it's going to take some time for that pasture land to heal. But then once it does, we will start expansion again.
Well, and I think too, as far as the meat case, we see competition for beef with pork. We have a lot of pork supply, seeing a lot of sales on pork, chicken there as well. But I think too, on the flip side of that, Chad, someone wants to buy a steak. There are certain people out there that say, "I'm going to go buy a steak because I want a steak and it tastes good." And they may buy a cheaper cut, but they're still going to go buy that steak. I just wonder how some of that retail demand could factor into these markets here throughout the this first half of 2023, we'll say.
Well, that's the deal. I think what you've seen, and this goes back to the inflation discussion. Part of the reason inflation is so sticky is because, yeah, there are people like me, and I'll point at myself in this case, that, yeah, if I want the steak, I'll go get it. It may cost me a bit more. I may complain about it, but I'm still paying for it. I'm still wanting that at the center of my plate. And that has been one of the major strengths when we look across the meat sector, is that consumer demand here within the U.S. has remained very strong. In fact, when we look at per capita consumption of meat here within the U.S., we're at some of the highest levels we've ever seen. We're holding in there at about 225 pounds of meat per person per year. And so that wavers a bit, but that's a pretty good, strong level for us right now. And that has been supportive across the livestock sector. The challenge, as you mentioned, as longer that inflationary problem lingers with us here, you do see consumers start to trade down, whether that's in terms of size of the package we're buying, or maybe trade amongst the meats, looking for that, let's call it, more affordable option on that protein choice. That's I think the concern as we're looking forward here, is when do we really start to see that sort of trading going on within the meat counter?
Well, and as far as the hog market, I want to touch on that real quick as well. Hogs have definitely taken their beating the last couple of months here. April, the lead month now, starting to see a little more convergence with that cash index. But as you look at this hog market, you look at the pork side of the equation. What are your thoughts there?
Well, I think in this case, what we ran into was, while consumer demand over the past couple of years has been fairly significant, strong, we saw our export demand on the pork side really take a hit, especially, well, throughout the bulk of 2022. And as we came into 2023 here, there was this question of, okay, have we pulled these prices back enough to help incentivize maybe a little more growth there internationally? And I think the early signs suggest that, yeah, we may be getting to that pricing point now where we are starting to get some more sales internationally. And the market I'm going to watch here will be China. When we're looking there, they're still dealing with let's call it the long-term ramifications of African swine fever. They haven't been able to grow as quickly as they had wanted to. And let's face it, pork is what they kind of prefer in the center part of that plate. And so I'm waiting to see, do we see them continue to build their way back into the U.S. market to help support pork longer term through 2023?
Well, Chad, always appreciate your time and insight into what's going on with the markets and the ag economy, et cetera. Any final thoughts for us? Anything else you want to reiterate for our listeners and viewers here before we wrap it up today?
Well, I've been using this with farmers as I've talked, across the state over the past month. When we're looking at our ag markets right now, I sort of call this almost like a Goldilocks spot. The idea is crop pricing, while it has come down, we're still at these very strong levels that are able to cover our production cost. And yet those price drops we've seen on the crop side have alleviated some feed cost concerns for a livestock industry. And when I'm looking at the economics there, we're doing pretty good there. So like I say, it's called the Goldilocks spot. growers and users are sort of happy where they're at right now. The challenge is ag almost never is able to maintain itself in that area. So this is also a good time to look to protect pricing that is favorable to you right now. So as we discussed earlier, crop pricing, while it is down a bit as I'm looking at new crop, they're still at really good levels. If I'm looking at feed cost right now, yeah, we've seen some easing there, and it gives me opportunity to, again, protect myself and just in case prices move against me in the wrong direction as we move through 2023.
And it comes down to sharpening up that pencil, making sure you have things in order, so to speak. You know those break evens, et cetera. You know your position to make sure you're on top of your marketing and protecting that risk that is out there, right, Chad?
Definitely, that is the case. Our homework never doesn't stop just because we got out of school, especially if you're in farming. Yep, we've got to keep track of that bottom line number because that's what keeps us on the farm.
That is a great, great point. We'll wrap it up there. Chad Hart, Iowa State University. Always great to catch up with you, sir. Have a great rest of your week, and I'm sure we'll talk to you again soon.
Thank you, Jesse. Have a good one.